Hello and welcome to this Monday's weekly market briefing. We've got a lot to talk about, but firstly, the World Bank lender to poorest nations seeks record funding haul. As well as that, Putin now wins 88% of the votes in the election where the opposition was banned according to early results. Finally, Benjamin Netanyahu defies Western allies over his Gaza strategy. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure you subscribe. The first article to talk about is on the topic of this World Bank lender. Now, the World Bank's fund for the world's poorest nations is now seeking record financing. This comes in an attempt to tackle the mounting debt and climate crises in such nations. Now, we have covered the World Bank and its operations a few times on this channel, and we often do kind of talk about the issues that the World Bank might be having within the entire global macroeconomic environment. We know interest rates are higher than the decade highs basically at the moment. If I've worded that poorly, I'm sorry, but interest rates are at all-time highs really in a lot of these Western advanced economies. As well as that, we're seeing record levels of inflation, and this is certainly weighing on lending across the globe. And this is starting to also affect, of course, the World Bank's operations. However, this article less so focuses on that issue, which we more commonly look at, and this kind of more so looks at maybe these advanced economies, which often do fund the World Bank the most, are now struggling with their own economic situations, and as a result, they're going to have less capital at hand to maybe provide in aid or just provide for a lending capacity to the World Bank for its operations. And this is what we're kind of seeing here. So whilst the world is struggling with record level interest rates, and that's causing defaults in many of these nations, these poorer nations, and issues with their debt, the World Bank, which would usually step in and help solve that issue, is now struggling with that funding that it needs to carry out such actions because those advanced economies in the West are struggling with their own finances, and so this is something that we could expect to worsen, but ultimately is a very important topic to kind of note, because often in the markets we do focus on these advanced economies. We do look at the exchange rate of the pound, of the euro, of the dollar, and we look at the key stock exchanges, whether that be in Japan, China, Britain, the Eurozone, or the US. Ultimately, we still have many of these exotic foreign exchange markets which offer great returns and great opportunities, and that's why it's so important to kind of understand what's also happening across the world, especially in these poorer nations, because ultimately that's still important for understanding the world's situation with foreign exchange and that kind of thing. So that's why we are noting this article as something that is important to kind of keep your eyes on. Now, with the IDA, in need of its largest replenishment ever of financial resources in order to provide cheap loans and grants to 75 developing countries. Now, the IDA is the International Development Association's assistance kind of program, and that's the largest lender within the World Bank. So that's a very key kind of organization, a very key operation which takes place, which the World Bank facilitates, but obviously also depends on these Western nations to fund such operations so that these poorer nations can be well funded. Now, in a previous round of financing, the IDA had raised $23.5 billion from donor nations in 2021, and once the figure from capital markets has been fully added to the tally, the total round that was raised during that period was around $93 billion. So that's the scale of these kind of funding hauls that we've previously seen. And as we do know that, of course, many nations, and especially the poorer nations of the world, are now struggling greatly with their financial and macroeconomic situation. situations, we can expect the need for, such funding to be greater than ever. And so we could be looking at, that kind of figure of, amounts raised by donor nations being around that $30 billion mark before we see any action within the capital markets. That's just pure speculation, of course, but just based on the issues that we are seeing within poorer nations, that could be something that we would expect. But of course, as I've just highlighted many times, we do have the same issues facing those larger Western advanced economies, which could, of course, weigh on their ability to actually provide any financing for the World Bank's operations, which is kind of the key issue which is facing the IDA at the moment. Now, the IDA is seen by governments and policy groups around the world as one of the most effective aid providers in the global fight against poverty and has $235 billion in total assets. The IDA is so successful in its operations because they are able to take their donations and leverage capital markets in order to triple its funds, which it then provides to the poor. The IDA therefore must turn to rich nations for fundraising every 3 years for capital. The issue for the IDA at the moment is that a great deal of nations that now face debt crisis will have to pay back more to lenders than they will receive in new loans, reducing the IDA's funding. A great example of this is China, who has stepped back down recently from lending. So very significant donor and lender to do with the World Bank that is now out of kind of operation, it seems. Macroeconomic instability in its 4 biggest donors, the USA, UK, Germany and Japan, also adds to the issues of its funding, and it's causing individuals to call for the World Bank to intervene in different ways. So very interesting topic to note here, and focuses more on the kind of poorer nations around the world, and is important to understanding, I think, certain more exotic foreign exchange pairs and that kind of thing if you're looking at trading those sorts of things. So definitely keep your eyes on all things World Bank at the moment, but also, as we've noted in this article, macroeconomic situations within poorer nations and richer nations across the world is very important to highlight at the moment. So keep your eyes on all of that. Next article to talk about, though, is Putin, where we are talking more about geopolitical relations and world politics issues. Now, Putin is now on a sure trajectory towards a victory in the Russian presidential election, with this setting the scene for another 6 years of Putin's rule over Russia. Now, we don't often talk about Putin. We have spoken about Russia's invasion into Ukraine a few times, but obviously at the moment we've been more so focusing on tensions within the Middle East, especially as that's what's kind of been affecting oil prices and gold prices and that kind of thing. That said, Russia's war into Ukraine still rages, and we are still seeing, the dramatic effects across Europe and the rest of the world as a result of that war. And we have spoken many, many times about NATO, and, recently Sweden was, of course, integrated finally into NATO, and we've seen a great deal of kind of tensions rise within NATO and the EU itself to do with, of course, Hungary's president, I believe. I don't think it's prime minister, but President Viktor Orban. So, very significant kind of period for European politics. And of course, this election is one that's very important to highlight, as of course, Putin is a long-term leader within Russia, and, many things have, of course, occurred during his rule. Now, he is, of course, very divisive on the world stage, and we're kind of seeing this kind of modern Cold War kind of form as we've now entered this period following Russia's invasion into Ukraine, and with Israel's war in Gaza at the moment, our understanding of Hamas's funding and the Houthis' funding from Iran, and Iran and Russia's relations obviously create this picture further that we're basically seeing these proxy wars around the world take place, and this is affecting populations within the millions across the world. And of course, we've highlighted before the issues within the Taiwan Strait and the issue between Taiwan and China, with many fearing, of course, China's invasion into Taiwan, after we did see, of course, the more democratic and progressive party of Taiwan winning in the recent elections. So very interesting times to note for world politics. And here we're seeing a very interesting article on the Russian elections, where of course everyone did expect Putin to win once again. Now this comes amid the Russian invasion into Ukraine and suppression of political enemies, with the early election results presented over the weekend showing Putin on track for re-election with a record 88% of the vote and a turnout of 70%. Now the election was Putin's victory before the polls even started, considering that Putin had outlawed all criticism of Putin or the war and banned opposition candidates, putting its longest serving ruler since Stalin. Putin, is Russia's longest serving ruler since Stalin, and has only solidified his grip on power since beginning the Russian invasion into Ukraine. Putin's greatest opponent, Alexei Navalny, died in a remote prison colony last month, with the supporters of Navalny now being forced into exile. There are extremely long queues that formed at polling stations, reaching 2 kilometres within London. The first 2 days of voting saw dozens of arrests for both setting fire to booths as well as vandalism. So very significant actions taking place within Russia during these elections, and a great deal of world tensions as a result, kind of coming of this election. And we can definitely expect that affecting markets in different ways, which we'll come to on the charts in a moment's notice. Next to talk about though is of course Israel and Benjamin Netanyahu. Now Netanyahu has now lashed out a criticism from Western allies over his strategy in Gaza. Now this comes as he also accuses such allies as seeking to orchestrate elections which would paralyze the country and lead to its defeat in its war against Hamas, with Netanyahu also vowing to resist the international pressure, such as the pressure from the White House with their efforts to delay an offensive into the city of Rafah, which of course is on the more southern side of the Gaza Strip and borders Egypt. Now other European leaders have also urged Netanyahu to avoid such actions. Netanyahu has now accused the international community of having a short memory on the brutal toll that the October the 7th attacks had on the Israeli population. Following the October the 7th attacks, the IDF has embarked on a ground, air and naval operation into the Gaza Strip to destroy Hamas, with the Gazan Health Ministry now reporting 30,000 Palestinians dead as a result of the fighting. Joe Biden has recently been angered by the actions of Netanyahu, with his refusal to discuss a two-state solution and a lack of a plan to protect civilians sheltering within Rafah, both annoying POTUS greatly. And Netanyahu yesterday vowed that an offensive into Rafah would take place. Now, of course, we do know that this war has greatly affected prices around the world, not only in goods as a result of the Houthis' attacks within the Red Sea affecting shipping routes, but also of course the kind of tensions within the Middle East causing oil's prices to go higher, as well as people fear that a kind of regional conflict could of course bring in players which produce a great deal of the world's oil, such as Saudi Arabia, and as a result shut down the supply of such oil, and therefore affect the world supply of oil, pushing prices higher. So all of this kind of talk around Israel, Gaza, not only is it important to understand the humanitarian effects of such a conflict, but also it's important to understand how this is affecting the world economy and markets as a whole as well. That's all to talk about in this article, and the articles as a whole really. Next to talk about, of course, though, is the charts, where we do have quite a bit happening to start off the week. Now, to start off, we are, of course, on the US 30, more specifically to talk about the Dow Jones, and more generally to talk about US indices. Now, as we can see here, it does seem like ending off Friday last week, price did make its way down and finally tapped that 78.60 Fibonacci retracement level. Actually, I've not drawn this out or kind of corrected it to recent levels. But as we can see still, price had come down and tapped that 78.60, which we did note as kind of a key area and a final level for price to come down and come into contact with. That said, ultimately, on Friday to end off the week, price had moved down to lower levels than we really did expect. As before Friday last week, price was still kind of sitting above this 50% Fibonacci extension level and was sitting above this kind of counter bearish trend line. So we kind of said that maybe price has now come into contact with that support level, that 50%, and that bearish inverse trend line. And now price was ready to kind of continue to the upside and keep making new highs. We did not see that, however, and instead price continued to the downside and is now tapped that 78.60. But more importantly, it has tapped that 78.60. It hasn't closed on that level, and therefore, we could definitely expect to see price continue to the upside entering the new week, depending, of course, on fundamental data and news as well. Of course, if price does come down and break these recent lows, though, we could definitely see price then continue all the way to the downside and come into contact once again maybe with this liquidity zone. So keep your eyes on the US 30, very interesting price action to note. And we are getting a great deal of US data this week, which will not only affect the US 30 but also the dollar, which is next to talk about on our list really. Now price is kind of in a weird position at the moment where it's stagnated between both the 50% and 6180 Fibonacci retracement levels. Now, of course, one would expect price to either just interact with these levels and run off or ignore them. But as we can see here, price is kind of slowed down and is now just sitting in between those two levels. Last week's producer price inflation figure obviously did help price move higher. Well, not price, did push the dollar higher as a result of that figure coming in above previous expectations and therefore creating this kind of fear of further inflation within the US economy, which of course reinforces that more hawkish view by the Fed on its monetary policy, which is the interest rates within the US need to stay higher for longer, and pushed back, of course, those rate cut expectations to later months. So that's where price is currently sitting at the moment, in between those two Fibonacci retracement levels. Now, of course, we don't have much kind of liquidity levels within this area to note. Price did break above this kind of previous area of stagnation in price, and we do have this area of price which price has previously pushed down to and then spiked to the upside. So we don't have too many levels to note here, but definitely this upside level around this liquidity zone could be one to note, which price can now make its way up to and react with. So definitely keep your eyes on the dollar, as there's certainly some zones to note which price could make its way up to this week and react in an interesting manner with. So next talk about though is Euro USD, where we're still on top of the dollar here, and we are getting a great deal of euro and dollar news this week in terms of US and Eurozone data. So that will all be affecting the Euro USD. We'll come to that more importantly on the economic calendar just after the charts. But here, price action wise, price has kind of broken this area of liquidity that we've noted before and is now kind of hooked back on itself and interacted with that liquidity zone, tapping that area, and is now moving in a bearish fashion away from that area to start off the week. What will be interesting to see then is if price now continues to the downside, or in fact, this was kind of a fake out and now price will continue pushing for higher levels, as we've seen, kind of be the case since the 14th of February on the chart. So yeah, definitely keep your eyes on the Euro USD. Next talk about though is pound yen, if I can get that up, which I think is in a very interesting position simply because price has now come into contact with this 6180 Fibonacci extension level. As well as that, price has come into contact with this key liquidity zone. So in my head, this has kind of created an interesting picture where price has come back, it's retraced to the upside, and is now reacting to a very to an area with a great deal of kind of bearish liquidity. So we could definitely see a sell-off from this area, in my opinion, to start off the week. That said, as I've then noted, by this area and this Fibonacci extension, Fibonacci retracement tool, should price make its way down to this level, price could most certainly interact with this 3820 Fibonacci extension or Fibonacci retracement level and liquidity zone, and then continue to the upside to make new highs. So maybe in this price period that we're seeing here, price could make its way down from this level to start off the week, and then Tuesday, Wednesday, price can make its way away from this area, break above this previous area of liquidity, hook back on itself, and make new highs. That's kind of if we were to imagine a picture here of great possibilities, that could be something that's certainly to note. But of course, this will all be influenced greatly by the data that we are getting this week, considering we are getting both the British and Japanese inflation rate figure this week. So both of those figures will be greatly affecting pound yen. That's all to talk about on pound yen, though. We've got to get through these last three commodities and cryptos quickly, so we'll get through that now. Bitcoin's back below the $70,000 Bitcoin level, and is now kind of hooking back on itself to interact with this liquidity zone. So interesting levels to note on Bitcoin at the moment. Next to talk about is gold, which I would like to talk about for longer, but of course we are kept short by our time limit. And on here, we are seeing gold form a kind of bullish flag. That said, price is very overbought at the moment, so maybe we do have a great deal of bearish options forming within the market here, but definitely a bullish flag which is being formed here. And finally, to talk about on the charts is oil, which is still around that $85 a barrel level, which we did know was as a result of the recent IEA forecasts on oil supply and demand. That's all to talk about on the charts, though. Next to talk about is the economic calendar, where we are getting a great deal of economic data this week, basically, which will be greatly affecting the charts, and it's all very important data. To begin with, we are getting the Eurozone core inflation rate figure and inflation rate figure as a whole, followed by that with the Bank of Japan's interest rate decision, very important figure for pound yen there. Next is the Aussie interest rate decision, followed by the Eurozone and German economic sentiment figure, so two very important Eurozone figures, followed by the US and Canadian inflation rate figure there, so very important US inflation rate figures there, which will be greatly affecting the dollar and US indices. Followed by that, we're getting some US building permits data and the British and Japanese inflation rate figures. So two very important inflation rate figures which will be affecting pound yen. Followed by that, the Fed's interest rate decision and Fed press conference. So super important data and a decision which will be affecting the markets the most this week, in my opinion, which is of course that Fed interest rate decision. And that press conference is always so important to hear Jerome Powell's rhetoric first hand. Followed by that, we're getting the Aussie unemployment rate figure, followed by the Bank of England's interest rate decision. So another very important pound piece of data there, which will be affecting the pound greatly. And finally, of course, once again to repeat, the Japanese inflation rate figure. That's all to talk about on the economic calendar, though. We've got lots in the articles, lots in the charts, and lots on the economic calendar. This was a long one, but I hope you're well prepared for this week of trading. But that's all from us at Wildwood Capital. Have a great one. See you later. Bye.